Hi, I'm Soshana.
Hi, I'm Joyce.
It's good to have you again.
That's right.
Yeah.
Week goes by so quickly.
Yeah, it does. It
it's
does.
already September.
Yes,
Crazy.
it is.
Are you
It
ready?
is. I'm ready. I'm ready. I'm ready. I gotta keep
Ready
it
to
moving.
close the year,
Yes.
do the things that you plan to do.
Everything. Everything. We have to pull it together. Gotta
Yeah,
pull it together
I
and
know.
end the year strong.
Yeah,
End
that's
year
the
strong.
idea, really.
Yeah.
I know you have new agents coming on board,
Yes.
and because there are changes and whatnot, and
Yeah.
I'm sure they'll more successful.
Mhm.
Agents become, or any self-employed person becomes, that next thing they think about is like, am I supposed to do anything?
Yeah.
How do I do my books? Am I doing this correctly? When you first started, you don't really have money, right?
Right.
To
Right.
hire all different professionals.
Right.
You kind of know you need to, but then oh my God, if I make this amount of money, whatever,
Right.
if I can afford it per
Right.
se. So that's what happens. I think if we can talk about I guess what you need to think about when you
I think
are.
that would be great. I think that would be awesome
Yeah.
if we can talk about that, because we do have a lot of new agents. There's people just getting their licenses,
Mhm.
and those are the people that really need to know. Even, I'm gonna tell you, even, I would hate to say this, but even seasoned agents, some of them have not had the guidance of what's the best practices as far as their finances are concerned,
Mhm.
or even about an LLC. So if you can talk a little bit about that, that'd be great.
Oh yeah, and you're. I think it's a different kind of brain for the business owners. Let's say CEOs. You start your own business.
Right.
What you're focusing on is how am I going to build myself? How am I going to build my business?
Right.
And that's where your focus is, right?
Mhm.
All these things that must be done,
Mhm.
but it's kind of like not directly connected to the bottom line.
Right.
As business owners, you tend to kind of push it aside.
Right.
And so that's where you need, your hiring people, professionals to help
Right.
you. The thing is, though, it can be expensive, especially at the starting point.
Right.
So say that you have a new agent. So you go through this training. You hold their hands. You tell them, hey, this is how you do it. This is how you market yourself. And this is how you, I guess, write a business plan.
Right.
As to, okay, if this is kind of income that you're looking for, let's do this, let's do this, let's do this, right? So that's the business side of it.
Right.
As to how do you handle the books, right? That's where the question is, and because that's directly connected to your tax returns.
Yeah.
We want to make sure that we pay what we're supposed to pay,
Right.
but we don't want to overpay, or if you
Right.
don't have to, right?
Right.
So that's the whole idea. So when you start a business, you obviously think about, oh, what am I going to do? How am I going to make money? How am I going to market myself?
Right.
How am I going to put a plan together? And
Right.
how am I going to execute it, right? That's
Exactly.
where you come in as a broker,
Right.
and you help them with all these things. So when you first started, you get licensed. You become a self-employed person, right? Sole prop. So then you don't have to make a company, right? When you're sole prop.
Right.
But the more money you make, you think of two different things. Am I going to be worried? Do I need to worry about maybe potential liability risk?
Yes.
That's first thing. That's really the first thing that people worry about. I know you guys carry E&O insurance and things like that, but that's it. And then the second thing is, am I paying too much tax?
Right.
Is there any way to reduce it?
Right.
So that's the thing. So when you first start up a company, there are two different expenses you kind of have to think about. Is startup cost.
Right. That's true.
And then organizational cost.
Right.
So there are two different types of cost, and there are different limits applied to it. Meaning, the organizational cost will be like, well, you may need to pay something for licenses.
Right.
Like you may need to take some courses, whatever.
Right.
Those are going to be all connected to that. And any kind of consulting fees that you may have to pay to like attorneys or even accountants.
Okay.
Right? That'll be the all organizational cost.
Is that the same thing as operations? No.
No, you're not starting you haven't started your business yet.
Oh, okay.
No income yet.
Got it. Okay.
Right. So that will be it.
Okay.
Right. And then the startup cost will be, okay, now I get this. what if I need to get some kind of training
Right.
or give training,
Right.
for example, right? And if you say that you sign a lease, right, to go into somewhere, or you agents sign some kind of like agreements with the brokers, and there may be some fees and what have you, but you have not started your business yet.
Right.
That'll be all kind of like a startup cost. Startup
Right.
cost usually, the biggest, I guess, chunk would be marketing, maybe,
Right.
or drafting a plan and things like that, or maybe you travel. You need to travel to see different like people to join the, or to
Right.
support you,
Right.
or maybe it's fundraising kind of thing, right? So those things will be all startup costs,
Right.
So startup cost has a limit as to how much you can deduct it in a year, right? The organizational cost also has a limit. I think it's up to $5,000 you can deduct it.
Okay.
Some things you have to amortize it, but that's kind of like the gist of it.
Right.
So when you are first starting, you want to think about what kind of expenses have I incurred, and am I going to incur before I actually start the business?
Right.
So you kind of keep the receipts, so you can bring it to your accountant when you file your tax return.
Okay.
So that's the starting point.
Right.
So now you're making money. First year you may make like $12,000 or $24,000.
Right.
Although you're getting the hang of it.
Right.
So it's absolutely fine for you to file Schedule C, which is self-employment tax.
Okay.
Right? And then now you're growing and you're like, oh my God, I'm paying too much tax. That's when you kind of go visit your accountant and sit down
Okay.
and see, can you take a look at, can we do some kind of tax planning
Right.
to see if I can save some money, if there's any room for me, am I doing it correctly? And that's when you really want to look at, is it time for me to set up or create a company name
I see.
instead of getting money
directly in your
to,
name.
social security number.
Right.
A lot of people, especially agents, create an LLC, right?
Right.
That's a limited liability company.
Right.
The main difference is that whenever you create a company, it's a different legal entity. Then you need to register it with the state, right? Once you register it with the state, then you get the tax ID.
Right.
And then the tax ID will, you're going to have a company name now, like ABC LLC, for example. So then you obtain a tax ID, or you work with your CPA, and then they're going to do that for you.
Okay.
So you register a company name. Now you have a tax ID. So now when you get money, you can ask them to pay it to your company,
Right.
LLC, instead of to your individual tax ID.
And I think you need all of that. Like, it seems like it makes sense the way you're explaining it, because, I've opened a couple of businesses, and then whenever I have to do it, I'm like, which one do you do first? But it makes sense, like first go and get secured your name, right? Secure the name, then you go IRS, get the tax ID number, EIN number. Okay, now you have both of these two things, and then now you can go to the bank, open up the bank account.
Right.
So, explaining it that way, it kind of simplifies it. And I think that it's good for people to hear it in that way so that they understand sort of the process.
Right. So it's not that difficult once
Yeah.
you think, oh, yeah, it must be that way. You know what I mean?
Yeah.
It kind of makes sense. Now, we're in Georgia. So each state is kind of different as to what else you need to do. And it also depends on the county. Some counties you need to do more to it, and some cities even. Like here in Georgia, there's one city in Georgia, like Fulton County.
Yeah.
If you do business at home, they'll really literally knock on your door. You have to register it with the city.
Okay.
I've had people. It's kind of funny how they're. You know how HOA, some HOAs are pretty strong.
Yes.
There's Karen watches over you all the time.
Yes.
And this person actually was fixing cars, which you're not supposed to do in your garage. You know what I mean? He was kind of like on the side fixing cars, and he was, selling it or doing some kind of minor repairs and whatnot. They reported it to the city, and the city actually came out.
Wow.
They fined him, and they did all kinds of stuff.
Wow.
So some cities are pretty strict.
Yeah. Wow.
So whenever you do business at home, you kind of want to
find out.
Yeah, you kind of want to make sure that you're all kosher with that. And for realtors, it's not that crazy because you're usually inside of the home. Nobody really knows what you're doing inside.
Right.
So that's kind of. But But the county code or the city code says when you do business at home, you're supposed to report it.
Mm-hmm.
Reporting is great, right, in some sense,
Yeah.
because you get this extra liability protection. But what it also means now, then you have this reporting requirements.
Mm-hmm.
You have to report these things
Okay.
to the county, to the state, which means then you have to kind of keep an eye on the deadlines or the due dates or renewal dates, and you may need to pay some money to everybody.
Right.
So there's kind of the side of it too,
Okay.
right?
Yeah.
So you kind of have to be mindful of that.
Of those.
People say, well, oh, I'm barely starting. I don't even know if I'm going to make money, right? So do I need to still go see you and talk about my company structure? I think talking to someone before you start kind of makes sense.
It's a good idea.
Yeah, because so then you start on the right foot. You know what I mean?
Right.
Because I had a client who. This happens a lot, though. It's not just this particular client. This happens a lot because you hear different things. Mm-hmm. Sometimes when you're talking amongst yourselves, for example, realtors and whatnot, and one says like, "Oh, this is what I do, and this is totally fine. This is what I do, and that's totally fine." Mm-hmm. So, but like, depending on where you are, for example, if you own a apartment, let's say, right, in New York. Mm-hmm. New York is crazy in that when you sell the property, that belongs to to a company, then you have to pay all kinds of taxes: city tax, county, state, IRS.
Wow.
And most people have no idea until they have to report it, because right, you know how the price of a apartment, let's say, had gone up like crazy in the last 30 years. Yeah. Now they're thinking, well, I bought the house or the apartment complex. I paid like $1 million back 20-some years ago. Now it's like $10 million. I'm like, God, I'm going to collect that $9 million. I'm going to be
rich.
But like New York City charges like 8-point-something tax, over 8%. Yeah. Kind of like that. Yeah. So you kind of have to be mindful of that. So before you started, people say, okay, well, this is what he did or what she did, and they create sometimes a C corporation. Okay. Which is a totally different kind of company structure. It makes sense for some people to do it, but if you are going to be strictly managing real estate properties, and then there's probably not a reason to do so. You know what I mean? So those things, like basically what you need before you go see anybody, for example, before you come see me, you want to think about it. What's your goal? What do you want to do? Right. You know what I mean? In the next year, are you going to be doing how many, property management, or are you going to be just doing residentials? Are you going to do commercials? Are you going to be working with others? Right. Are you going to actually purchase a property of your own and manage it? Right. So those things will make a difference, right? Yeah. So that's why you kind of want to sit down and talk about those things. Right. So before you go see someone, kind of sit down and think about it. What's your goal? What are you trying to accomplish? Right. Right. And then and then you kind of ask questions, and then decide what kind of company type is most ideal. Ideal for your situation. Exactly.
Yeah, I think that makes sense, because a lot of times people, and this happens even in real estate, somebody's talking to you and they're like, well, my cousin, they bought a house and they got an interest rate or whatever. Not everybody is in the same situation. No. So I feel like what you're saying is really important, so that they understand that, just because another real estate agent, has an LLC, or, S corporation, C corporation, doesn't mean that applies to you, because they may be doing a different type of business.
Right. And that brings up a very good point, in that people don't necessarily tell you the whole thing. Right. Right. So especially neighbors and, the people you go see, like in churches and whatever like that. And they say, well, you hear this a lot, I'm sure. Is that, oh my God, I made such and so much amount of money because I bought this stock and like I held it for a year and now it's like blah, 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 right? Not all of it is true a lot of times. And people never talk about how much money they lost. Yeah. Right? So that's exactly it. Yeah. And so, like, and also, sometimes people do things like, for example, you file your tax return and this is not how you're supposed to do, but you do it anyways,
Mm-hmm.
or or that you're told it's okay to do it, so you do it, and you got away with it for 5 years, 10 years.
Right.
But that doesn't mean you're gonna be so lucky in the future years, right? So, whatever happened, whatever you're told by someone else who's not an expert or specialist in the field, that doesn't mean that's right. You know what I mean?
Right.
Just because nobody caught you yet,
that doesn't make it okay. You know what? You're saying that, and I'm thinking to myself, I've heard people, they talk about this. They're like, well, I bought a car. This is in real estate, okay? Mm-hmm. I bought a car with my, I have a company car, okay? And I'm like, oh, really? You can get a company car? I'm a real estate broker. Can I do that? That's the question, Joyce. Is that okay?
Yeah, it is okay. But why would you want to do that? That's the question. So I know that happens a lot. Realtors, somebody buys this, car with a company name and now can fully expense it. And I can even use like accelerated like depreciation schedule, and so I can like say that I bought like $100,000 car. Now I can. It doesn't happen like that.
But what happens if you put I put the logo? Put the logo.
Doesn't matter.
Georgia Homes logo.
Doesn't matter. Here's the one thing that you really want to make sure. Like, okay, so you purchase a vehicle using your company name. Okay. Which means then the owner of the vehicle is the company. Okay. So when you go get insurance. Okay. Car insurance. The insurance premiums are going to be probably double, if not more. Okay. That's the first thing. All right. The second thing is, do you really use it? Is there anybody else, your employee, using the vehicle other than you?
Why does that matter?
Because if truly a company vehicle, that's what everybody's thinking. You're not the only driver. That's why insurance premium is so high. Okay. So, or are you really, so you're saying, well, no, that's not it. Either I or my husband, like my family members are the only ones who are going to be driving. Oh, okay. Right? Right. Okay. So then why would you want to do that? Another thing is realtors drive a lot. Okay. Right? Right. So a lot of times you'll be better off using mileage than the actual expenses. Okay. You see what I'm saying? So if you are thinking about, okay, I purchased a vehicle, I use it for the business, and so then I can expense it all out, right? But that's what you're thinking. But when you actually choose actual expense method over mileage method, you cannot go toggle back and forth. So let's say you bought a $50,000 vehicle, right? And you put it in as a business asset, right? Then you depreciate it, right? But once you depreciate it, you can't use it. You can't use mileage. You have to use actual expense, meaning how much gas for the business, how much gas for the year used for the business, insurance premiums, repairs and what have you. More importantly, though, about like 99% of the time, realtors cannot deduct 100% of the car expense as business expense. Why? Because IRS knows better. Okay. Because they're saying, well, are you sure you're using your vehicle 100% of the time when this is not a van, cargo van type of thing? Your business that you're in tells them that you probably 30-40% of the time you use it for your personal reasons. So that can be a red flag. Okay. So let's say, well, Joyce, I still want, instead of using mileage, I still want to use actual expense to deduct my expenses, right? Right. But then you're going to go like, okay, let's do that. Then let's say the price of the vehicle was $50,000. Okay. Then we're going to use only 60% of it as business expense, not ever 100%. If then you come back and say, hey, Joyce, I have another vehicle. But it doesn't really matter. You see the logic as to how it works out. Same thing for me. Let's say I go out to see clients, right? And that's obviously business mileage, right? Business expense. I purchase a vehicle. I'm like, I'm willing to pay that extra premium by registering my car, right? Using my company name. Okay. But when you actually calculate the dollar amounts, does it make sense? A lot of times it doesn't. It doesn't. Okay. So there's that. So
Mhm.
the rule of thumb a lot of times is like you kind of like use your common sense
Mhm.
to think about, oh, do I use my car 100% of the time? For example, you have an office,
Right.
all right?
Mhm.
So from your home to your office, you're a
Mhm.
realtor.
Right.
From your home to your office, that's considered commuting.
Right.
That's never, there's never an expense
Right.
by the company.
Right.
It's considered to be your personal expense, right?
Right.
So then you calculate all that, then, so realtors, you would probably be better off using mileage.
Okay.
But then if you use mileage method, then it doesn't matter what kind of vehicle you use. You can switch cars, you can do all that,
Okay.
right?
Mhm.
Because we're not actually using your a very specific vehicle or an asset,
Right.
right?
Mhm.
To compensate for the mileage, business mileage that you put on.
So, it is possible that whenever people buy a vehicle
Mhm.
and claim it as a business vehicle, that the IRS may look at it as a red flag and could potentially audit you or something?
No,
or
it's
what?
not like if you buy a vehicle using the company, it's not a problem.
Right.
Whenever you bring it to me, let's say you bring it to me,
Yeah.
and you go, "Well, Joyce, I bought a car and I use it." I will ask you these questions because as a person who prepares your tax return, I'm supposed to do my due diligence,
Right.
right? So I'll ask you these questions.
Yeah.
I'm not going to tell you this is what happens. Until I get all the answers from you,
Mhm.
then I'll
Mhm.
explain to you
Mhm.
which one do you think will make more sense.
Right.
Then you tell me,
Okay.
right?
Yeah.
But there were cases that came back from the IRS
Mhm.
for my clients.
Mhm.
Well, not necessarily my clients, some
Right.
time ago.
Yeah.
So
Yeah.
then you have to explain.
Right. Mhm.
Yeah.
Okay.
So unless you know for sure, there was this case even, it was a logistics company for a trailer kind of trucks. They have no problem. 100% business are fine. Because usually what happens is then the trucks are parked in the company garage,
Mhm.
right? Company parking lot, and the workers come here and they drive it.
Okay.
You see, but for example, there are businesses where they do repairs. For example, let's say Kenmore house appliances. Let's say they're technicians, right? They go to you. So let's say I own a technician company, and like I have technicians under me,
Right.
and I send them out to all these places,
Mhm.
right?
Mhm.
So then they're like, I have this vans, right? It's a cargo van, obviously,
Right.
totally for 100% for the business,
Mhm.
right?
Mhm.
Because we're not carrying anybody.
Right.
So we claim 100% of it, and the IRS comes back and says, hey, no, the driver, do they take that truck with them after work to their house?
Mhm.
Those things kind of matter.
Okay.
So
Mhm.
commuting is never covered.
Right. Okay.
So again, going back to the point of nobody had, such and so, my friend never got into trouble. They're like, they claim 100% of the time. It's just, I vouch.
Just because somebody else hasn't gotten in trouble doesn't mean it's okay for you to do it.
Yeah. And another thing is though, like,
Mhm.
but you're adamant about it. Like Joyce, I mean, 100%, I can vouch for it. Like 100% of the time use it. And we'll file it according to what you said.
Mhm.
And somebody wants to know, asking you to explain, you go ahead and explain it to them.
Right. Don't ask me. Don't ask me. I told you.
Right. So it's not going to go that way. But I mean, like, that's the bottom line. You get that? Yeah.
Right.
So.
Yeah, that makes sense. That makes sense. It's good that you're that way. That you are honest with people and let people know what their options are. You can do it if you want to, but you have to be ready for the consequences if there were consequences.
See, so my job is to not necessarily tell you do it this way or that way.
Right.
My job is to let you know what happens, the consequences, the potential consequences, and you make a decision based on that.
Right.
And some people are totally fine with that,
Yeah.
Sometimes people say, you know what, Joyce, do it this way for me, right?
Right.
Do it this way for me. Because if they come back and say, like, and assess taxes and penalties and interest, I'll worry about it then.
Yeah.
So certain things are like that. But there are certain things I would not let you decide.
Yeah.
For example, if you do have business with a partner and what have you, then I have to be very clear on what belongs to whom.
Okay.
Stuff like that. Then you guys, unless you guys give me a clear instruction that's both agreed upon, I'm not going to just follow you coming to me and say, hey, Joyce, do this for me, that. When this person comes to me and Joyce, do this, I can't do that.
Right.
So there are different things that I cannot bend over, right? No matter what you say to me.
Right.
but there are certain things that you can certainly decide, well, that's what I want to do. Then you can certainly do that.
Yeah, well, my life changed. I don't know if y'all know this, but Joyce is my accountant. My life changed after you came into my life.
Oh, for the better?
Yes, it was. Because I really didn't know what I was doing. And I was prepared. We were preparing our own taxes, because people you have the right to do it. You have the right to do whatever. Even in court, you have the right to represent yourself.
Yes.
Okay.
Is this a smart move or not? That's another question.
Exactly.
Especially in the court.
Exactly.
Yeah.
Okay. Yeah. And there was some work to be done with our stuff because there were things that weren't done right. And Joyce told me to be patient. And do these things. It was a little painful. It was painful. But I tell you what, it was life-changing. And when you get that burden off of you, it is life-changing. It's like all of a sudden, like you can think clearly and you can like move forward. Yeah. And there were things, sometimes we're afraid to like take on expenses, But I tell you what, whenever I let go of, some, what is it, the bookkeeping part of it? Oh my God, my life changed.
But that's awesome. Time is ticking. Gotta go.
Okay. Well, anyways, just know it's worth having a good accountant.
That's for sure.
It really is, because then, I was able to start focusing mainly on what it is that I do. Yeah. I'm best at. Yeah. So. That was really, really helpful. So thank you, Joyce. I will forever be thankful to you.
Oh, thank you.
Yeah, so that's great. Anyway, so that's it for this episode.
Yes.
Yeah, so that was really interesting. And I think that a lot of agents will find this topic very helpful.
That's good. And I'm sure there are a lot more we can cover. So if you get to hear more about it as to what they want to know, we can certainly cover that topic next time too.
Yeah, and people can always put comments.
That's right.
Below. So just remember that. Again, I'm Soshana.
And I'm Joyce.
Joyce, it's so nice to be able to get together and talk about these things. So see you next time.
All right.
Thanks for watching this week's video. If you have questions on anything we covered or you'd like to ask us, just leave it in the comments below. We love to hear what you have to say about what we talked about and what you want us to talk about. Please like us on Facebook, follow us on Instagram, and subscribe to our channel. See you next time.